Hello everybody, so today I'm gonna tell you that how I plan my trading buys and how I go about my day while I'm trading. So first thing first, I open forexfactory.com. This is a website from where I track news, that which news are going to take place for the day. For today, if we see, this is the major news at 11 p.m. For my local time. You can adjust the time setting as per your region. So FOMC meeting will take place at 11 p.m. For me, it will take place after around 13 hours. So this is the first thing that I go and I watch, that what are the news that are taking place. So I keep an eye on all the currency news, because every news has a impact on gold movement. It can be small or a large impact. Basically, I find volume through news. So whenever there is news, you will see a move up and down movements, and you will witness accumulation, and during the news time the price will explode to one side, or maybe it will go on the both sides. It will leave wicks on the both sides. So the first thing you need to do is to go on to the Forex Factory or whatever news platform you are following, and see what news are there. And then I go to the charts and I look at higher time frame, that what exactly is happening. So here 1933, as tweeted on my Twitter, 1934 is the key critical region that I am eyeing on. So basically, if this particular region gets broke, it means the overall trend on weekly will become bullish. If you see here, from let's see, this was May, all right, and you can see from this point onwards, the price kept on going down, and price of every week has respected the high of last week. So this was the high of May 8th, first of week of May. Then you can see this week's high is below the high of last week. This week high is also respected the high, and here the price moved all the way up, closed the candle bullish, but it has respected the high of this particular candle, this particular week, and you can see it also has respected it. Then this candle also has respected the high of last week, and so on and so forth. So the high taking off is a clear indication that where the price can move in the coming days or the coming weeks. So if the price of gold is taken off from here, then it clearly means that the price can push up and maybe go to 1960, or if there is any significant news or the fundamentals and technicals are supporting, it can move into the upward direction. So you need to keep an eye on the highs and the lows of the weekly side. Then on the monthly level, you also have to watch out the highs and the lows. So here you can see this is the low 1892, and this is the high. So same way we have analyzed weekly, you need to analyze the monthly level with the same manner. So here, if monthly needs to go bullish, it has to take the highs of the last month, and you can from this chart you can see that the high of gold's last month is 1983, so it's quite on the upper side, and the low is 1893 almost. So there is a likelihood that the price can touch this high or come here and then move in the upward direction, or maybe there is a possibility that this particular candle moves sideways and will not break the highs and the lows of the previous one. So this is done in order to analyze at what is happening around with the chart. So when you are going to understand this fact, that how you have to understand the weekly and the monthly price changes, then you will easily analyze what is going on the lower time frame. So let's say I am a day trader and I'm just kicking off my day. So I will go and see the daily level. Daily level, last day daily close is bullish. It has left a low wick at 1920. So this is our one critical region and this is our second critical region. So this was a range where price has played yesterday. So see, this was the range where price has moved yesterday, and I just have minimized it. So when you open the chart, you anticipate the price movement through the last day candle. So we can easily anticipate that price can fill, fill this zone. This range can be filled. Price range can be filled because last day PA has gave a range to goal to move up. So if price has to go down, it has to just break this low 1920. Whether the high is taken off or the low is taken off, these are the critical regions that define that where price can go. But if you are a old trader or a you can say intermediate trader, you can anticipate the move from the daily print that has been printed on the chart. So from here we can anticipate that price has moved down for today, and now it's moving up, and it's highly likely that it can go and it can fill the entire range. So how we have to see it on 4 hours, then we will go and see it on 4 hours. So this is the anatomy of a 4 hours candle, and same goes for the 4 hours. If the low or the high is taken off for the 4 hours, it indicates us the direction, that in which direction the price can move. So right now I can see that this is a bit tricky on the 4 hours. I will move on to the 1 hour chart, and on 1 hour chart, this is the recent support. Okay, we can say this is the support and here is the resistance. So for me, this is a no trade zone. Whether I will go with the trade if the candle close above this zone or below this zone. But if I am going with the anticipated trade and I open the daily chart and I see, okay, what is happening here is I can clearly see that this wick can be filled. So I can on anticipation I can take a long and I can set the targets here. But in order to execute this trade, you need to go on the lower time frame. So here you can see on 1 hour, the 3 candles before the current candle, this particular candle has printed bullish. It has left a range. So it has left a downside range and it did not left any upside range. So there was at that time there was a likelihood that price can go down and fill this range, or maybe price can print a candle like this. So and on the left hand side you can see we have a support. So price holded this region, it claimed this as a support. If it has left a bit bigger wick, then there can be a possibility of taking a long. So it would be easier, like you have to just take a long here, and this will be the targets. Your stop will be very precise, 16.1 pips, and this can be targeted because 1 hour printed weak bullish candle, and then the 1 hour high was taken off. So we can anticipate that the price can move up and can fill the daily range that was printed on the last day. So this is how you plan, this is how you anticipate. It's all about anticipation, it's all about probability. There is no perfect strategy, there is no holy grail. You just have to focus on what is offered on the charts. Just analyze the higher time frames, go on to the smaller time frame, form your bias. Forming a bias is very important. So if here you have formed a buy bias and the next candle is printed as a red candle, you don't need to change your bias, because you already have made a bias that price can move up and fill the entire range that was created yesterday. So you don't need to change the bias, just stick with your bias and let the trade run. If there is no volume or if there is weak volume, you can close the trade and you can come up with a London session volume or New York session volume. So even if you got into the trade here on the high taking off, you can easily manage the trade on break even. So if your bias is right, you can easily manage your trade. So this is how you analyze any chart. This is how you can execute trades on any chart. So I hope that this particular short tutorial was helpful for you guys. I will come forward with more informative, knowledgeable content soon. Till then, take care. Bye bye.